All right, welcome guys. This is a quick video. I'm gonna try to make it at least 10 minutes long on risk management, right? Because risk management is one of the most important aspects of trading. Risk management is one of the most important skills to master when it comes to your trading success, right? And one thing you have to understand, when it comes to risk management, it's a mindset, right? It's discipline. So I was actually out for a run yesterday, and as I was running laps around the circle, right? The circle was about a quarter mile long, right? But I had to run like 10 laps, and I was the type of person to run fast, stop, take a break, run fast, stop, slow down, right? So I was more like that sprinter than pause, right? So it had this woman running next to me, and she reminded me about trading and risk management. Why? Because she was just jogging at one pace. She was just jogging at one slow pace. But even though I would run faster than her, surpass her, she would always catch up, and she would always leave me to the point where I couldn't catch up with her, right? Because she kept her pace and she wasn't taking breaks, because like trading, in reference to that run, trading is a marathon, not a sprint, right? If you approach trading with the sprinter's mindset, you're gonna get tired, your account is gonna get burnt out. So you have to approach trading with a long-term perspective. You have to approach trading with a marathon perspective. And with trading, it is more, you need to focus more on what's on the line, what you're risking, than what you're about to gain. You see, people tend to, and by the way, just take some notes. Note takers are money makers, right? And it's proven that you're going to forget 90% of the things I say on this video. So you should probably take notes. So, as I was saying, right, I just trying to put y'all in the right mindset before I dive into the information. So, you have to approach trading with a marathon mindset, right? It is more so about capital preservation before making profit. So before you enter any form of trade, you need to know what you have on the line, right? You need to know what you're risking. And then when you analyze, okay, this is the amount I'm risking, then you can analyze what you have to gain. What is your profit potential, right? As you know, we have what we call risk to reward. And we'll definitely dive into that. We'll definitely dive into that right now. So now that I have y'all in somewhat of the right mindset when it comes to trading, just welcome to Quantum Leaps Investments. Right, this is an investment group based globally, impacting many people, right? But I know a lot of traders struggle with risk management, so I really want to share this with you guys, to just help y'all with trading in general. So first of all, I want you guys to understand, right? Having a winning strategy, gaining a winning strategy when it comes to trading is the easy part, right? That's the easy part. Finding a winning strategy, developing that skill is the easy part. The discipline and the consistency is the hard part, and that's the part that's going to bring true trading success. Have you ever been in a scenario where you've been trading and you've had success, 4 or 5 trades, you won them, and on that fifth trade, because your confidence got built up, you risk more than you were risking originally, and that happened to be the trade you lost, right? And then because the trade you lost now wiped out all the gains you made for the first 3-4 trades, you decide to revenge trade and enter even a bigger lot size to try to make back the money you just lost, and then you end up losing that one, right? So I mean, it's a broad topic. I'm gonna keep it as simple as possible. I'm probably gonna make more videos, but there's a lot of psychology when it comes to trading, and we'll get into that for later videos, right? So the topic for this video is risk management. Now, risk management is simply being able to calculate your risk, right? Be disciplined about it and have a risk management plan, right? Because risk management is what's going to take you to the next level, not your awesome trading strategy, right? You could have a winning strategy with poor risk management, you're going to lose. You could have an okay strategy with great risk management and you're going to win. So risk management is of the most important, right? With trading and trading discipline. So to manage your risk, you have to understand, first of all, your lot size, right? So what lot size are you going to use, right? What lot size are you going to use? That's the first thing you have to take into consideration, right? The second thing you have to take into consideration, what is your risk to reward, right? What is your risk to reward? Now, risk to reward is a shaky topic because if you have a high win rate, then you can have a low risk to reward. If you have a low win rate, then you can have a high risk to reward, right? What do I mean by risk to reward, right? To me, risk to reward is more important than pips. You could get a lot of pips, but what are you risking to gain those pips, right? Risk to reward is the true essence of successful trading with your risk management, of course. So let me show you exactly what I mean by risk to reward, right? And this video is more for people who have spent some time trading before. So if you're a beginner, it's okay if you don't understand. So this is like what I would call a buy, trade, and block, right? Meaning the red zone is what we're risking. The green zone, the purple zone is our reward, right? So as I move the stop loss up and down, you would see the risk to reward changing. So let's say I place the stop loss right here, and this is our risk, this is our reward, this is our entry, right? You could clearly see that from the entry to the stop loss, let's say that's about 260 pips. And from the entry to the take profit is 2,000 pips, right? So for this scenario, we're risking 1 to 8, right? The risk to reward says 8 because we're going to gain 8 times what we risked, right? Why is risk to reward key, right? Risk to reward is key because once you know what is your win rate, you have to find the trades in line with that win rate, right? So for example, this is an example of what it takes to be profitable. So if you know you can only win 3 out of 10 trades, 30% of your trades, right? This is the win rate up here, and this is the risk to reward down here, right? So if you know you can win 30% of your trades, if your risk to reward is 1-to-1, meaning you risk $10 to gain $10, you risk 10 pips to gain 10 pips, then you're not going to be profitable. If your risk to reward is 1-to-2, meaning that you risk 10 pips to gain 20 pips on that trading setup, you're not going to be profitable. So if your risk to reward is 1-to-3, meaning you gain 3 times what you risk, then you're going to be profitable, right? So taking trades with only 1-to-3 risk to reward makes you profitable if you can win 3 out of 10 trades, right? Now, 4-to-1, you can win 20% of your trades and you'll still be profitable. Why? Because when you lose 4 trades, it's like you lost 1 4 times. However, when you win 1 trade, you win 4 times what you risked. So 1 win covers 4 losses, right? And that's how we're able to profit in the market. because what we risk is small compared to our gain, right? Compared to our gain. So I just wanted to show you guys that, to show you guys what is the importance, you know, of your risk to reward. But these are topics I'm just touching on, right? So for your trading plan, I would recommend only taking trades that's 1 to 3, right? That's 1 to 3. So your stop loss, the distance from your entry to your stop loss should be 1, and the distance from your entry to your take profit should be 3, right? So whatever you're risking for every trade, you should gain 3 times that amount. Now, once you know your risk to reward, how do you calculate your lot size? All of this is risk management, right? Your lot size. This is how you calculate your lot size. In order to calculate your lot size, the first thing you need to know is how many pips are you risking, right? And you have to establish how much percentage of your account, because you're a trader. This is your business, right? Trading is your business. So you treat it like a business, it's gonna pay you like a business, right? So invest in the knowledge. This is very basic knowledge, right? So to calculate your lot size, meaning what value are you given every pip, right? Because we know the market moves in pips. You have to calculate how many pips are you risking? How many pips are you risking? You have to ask yourself these questions before you enter a trade. Normally, this becomes muscle memory, but you have to ask yourself the question, how many pips are you risking for this trade? Now, after you've calculated how many pips you're risking, whether it be 100, 200, 300, 400, really and truly, it doesn't matter how many pips you're risking, because you're risking a fixed percentage of your account every time. So let's say, for example, 2%. You risk 2% of your account on every trade. You treat every trade with the same respect, because it doesn't matter how many confluences you have. It doesn't matter how you feel about the market. The market doesn't move based on, you know, emotions, right? The market just moves. The market moves based on historical data, fundamentals, and many other things. But anything can happen. So you need to be ready for anything. So treat every trade with the same respect, right? It's not about how many trades you can win out of 10, how many trades you can win out of 100, right? So this is how you calculate your risk. You go to MyFXBook position size calculator. You put in your account size, take notes, $1,000, just for example. You put in how much percentage of your account you're gonna risk, 2%. And now you put in your pips, right? How many pips are you risking on this trade? I'm just gonna put 30. Average traders risk between 30 to 50 pips. Click calculate. So you know you're risking $20. If you lose this trade, you're gonna lose $20. So the lot size you're gonna enter into your MetaTrader 4 app is gonna be 0.06. That's the lot size. That is 60 cents per pip, 60 cents per point. If we lose this trade, we're gonna lose $20. However, if we win this trade, we're probably gonna win 20 times 3, 4, 5, 6, and up the road, right? So yes, you know, you could look at what you're gonna win, but you have to first analyze, you know, what you're gonna lose, right? So when it comes to risk management, the key, make a trading plan, make a risk management plan, right? Ask yourself, I wrote this down. For your risk management plan, ask yourself, what is your daily risk? What is your daily target? How many trades are you taking today? And what type of trader are you? Swing trader, scalper, position trader, and what sessions are you trading? Answer these questions in your risk management plan, right? Now, it's easy. What's easy to do is also easy not to do. I'll tell you guys that. in order to see the vision of why you're managing your risk, you must have a plan. You must know exactly where you're going and why you're doing this. Now, you see, without a risk management plan, right? This is what your account equity curve is going to look like. Your account without a risk management plan, your account is just going to look like this. It's just going to go up, down, down, up, right? Now, you don't want your account to look like that because it could blow at any time. You want your account to just be a smooth curve, right? A smooth equity curve with that 1% gain, just that 1% gain, 2%, 3% gain, with a bullish equity curve, right? So just one more thing before we go into your rewards, right? Because yes, we're talking about risk, but we're also going to talk about rewards, right? So let's see here. I have this Astro position size calculator here. So I'm just gonna enter the coordinates for our account, right? Just so you could see what your equity curve should look like. Now, establish what's your profitability. How many trades can you win out of 10? We know we can win 7 out of 10 trades here at Quantum Leaps Investments, minimum, right? And our risk to reward, worst case scenario is 1 to 3, nothing lower than that. We're gonna risk 5% per trade, and we calculate this, and this is what, you know, our equity curve should look like, right? Constant gains. This is over 200 trades, right? Constant gains, right? This is winning 142 trades, losing 58 trades. But, you know, just for some perspective, I'm just gonna put a 40% win rate and do the same thing, right? So if you can only win 4 out of 10 trades, this is what your equity curve should look like. Now remember, you're treating trading like a business, so you have to know everything. And yes, you're still making money, but you know, it's like a roller coaster. Trading should not be like a roller coaster, right? You keep it simple to win. Now that we talked about risk management, we talked about making a risk management plan, managing your trades, right? Which I'm gonna make another video for, how to manage your trades so that you don't give up a winning trade, so that you don't make a winner turn a loser, right? Because managing your trade is super important, but that's a broad topic, right? We're just gonna keep it simple. I don't wanna keep you guys on here too long. So the key to this business also is knowing where you're going, having a plan, having an end goal, I could say. So this is a compound daily interest calculator, meaning we're going to use this calculator to see if we stick to our plan, where are we going to end up, right? Because trading requires discipline. And in order to be disciplined, you need to know why you're being disciplined, right? Now, 2 of the main problems when it comes to trading success is risk management and capital. If you don't have hundreds of thousands of dollars to put into the market to make real money, that's okay. But you're gonna have to put in the work to get there, right? So you need to have a plan on how you're gonna get there. Now, this calculator, we're gonna put in $100, right? That's our starting balance. Our goal, worst case scenario, minimum 25% per week, which is definitely achievable, right? Definitely achievable. You risk 3, 4, 5% per trade, and you place trades for the week, right? And remember your risk management plan. And we're gonna do this for 25 weeks because this is a marathon. 25% for 25 weeks. What can we get for that, right? So this is the result. Now, this is a compound plan, so you're risking 25% of your balance. Not risking, but you're gonna gain 25% of your balance every week once you stick to your rules. And understand, in trading, you want to focus on percentage gains, right? Just maneuver your lot size to risk the same amount, percentage wise, that is. So the first week, we're only going to gain $25, which is fine, 25% of 100. Second week, we're going to gain 31, which is 25% of 125. Third week, $39, which is 25% of 195. Now, for the first 3 weeks, it's going to be hard to stay disciplined because you're trading all week just to make $39, and it doesn't seem like it's worth it. But that's where your discipline comes in, right? That's where your marathon mindset comes in, right? You have to understand the long-term goal in the market. Now, after the 5th week, $61, now you're aiming to make 25% of $305. Now, understand, all you're doing is the same thing you've been doing for the last few weeks. Same type of trades. You're following your trading plan. You're taking the signals. You're placing good trades, average trades, but at the end of the day, you're aiming for your 25%. So by the 10th week, you're going to make $186 per week. Now your balance is $931. It doesn't seem like much, but as you can see, for your 20th week, your balance is going to be $8,000, and now your target is going to be $1,700 for the week. Now, all this compound plan is doing is calculating 25% profit every week. And you can see how that compounds. As your balance grows, your profit grows, what you're risking also grows, right? But it's up to you to stay disciplined and to have that smooth equity curve. It's up to you to calculate your risk, calculate your lot size, calculate your risk to reward, calculate the amount of pips you're trading, and have your risk management plan to get to these levels and understand, it is a marathon, not a sprint. So let's see here. I have this compound plan, right? I'm gonna place this compound plan in one of the links that I'm gonna put below. This compound plan basically just gives you like a guide on what lot size to use. So you can enter in your starting balance and enter in, your running balance. It's gonna do 5% risk. You could change the risk percentage. How many pips are you risking? And it just, guides you as to what lot size to use. And it shows you, okay, after how many trades, but this is for one-to-one risk to reward. It shows you after how many trades, what your balance should be, right? And what your lot size should be. But that's a topic for another day. In the meantime, use my FX book position size calculator to calculate your risk. Hop onto Compound Daily and write out your trading plan so you know exactly the destination you're going to go, which is very possible. I've done this and I've seen people done this with my own eyes, right? So let's see if I have anything else to drop on you guys. I think that is it for now, right? That is it for now. Be safe out in the market and stay tuned. I'm gonna drop another video on exactly, how to compound your accounts, and we're just gonna dive a little deeper into trading. But if you're interested in learning more, just DM me. I'm gonna link my Instagram in the bio. All my information is gonna be there. And good luck in the market, guys.